Hello, everybody. Welcome to CoinFund Q&A. Today we have Ash and Adam from Zen Protocol. Welcome, guys.
Hey, I'm Adam.
Hey.
Nice to meet you guys.
My name's Ash. Nice to meet you all.
Awesome. Thank you, both of you, for joining. Adam, do you wanna tell us, like, at a high level, what is Zen Protocol and how did you come to be building it?
Sure. So I think it's easiest to divide it into two main aspects. The first is basically a blockchain protocol custom built for financial functionality. Basically peer-to-peer financial instruments. And the second aspect is the integration with Bitcoin. So this is similar to kind of like sidechain functionality. The way we've come about this is myself, Ash, Nathan have been in Bitcoin one way or another for a few years. All of us at least since 2012. And about in 2016, a few months before the DAO hard fork happened, we were thinking that maybe there's some value in this smart contract stuff, and we'd like to pursue that. From there, basically me and Nathan started the thing. Ash had joined on within a few weeks, and we've been continuing ever from there. Yeah, we're a team of 7 people now, basically, and that's basically in a nutshell what we're doing.
Cool. So do you see, like, a Zen Protocol, you mentioned that it was like heading for financial application. So is this a smart contract platform? Is this a asset creation platform, or how do you view it?
Sure. So I think that the term smart contract is a bit maybe diluted. Today, when you say smart contract, usually what you want to say is like software. It's right. It's like any decentralized app is considered a smart contract, I'd say, as the current nomenclature is doing. Yes, for us, it's like strictly, I'd say, contracts where it's basically enforcing rules that people would usually have to settle in court. They can use us to do. And yeah, it's not just an asset platform. It's not just a smart contract platform. It's just everything you need to do financial instruments. We have things in there that beyond that, for example, data feeds, integrating data from the external world into the platform. Well, that's one prerequisite you need in order to be able to settle derivatives. Another prerequisite you need is the actual functionality of how do you whatever, subtract it. What are the predicates you put on the contract? And that is definitely a smart contract platform.
Cool. So would you be able to do something like create a new cryptocurrency using your platform?
Yeah, sure. Every contract can create a token, and for example, you could issue call options, or you could issue currencies.
Right. So because a currency is kind of a financial instrument of sorts, that is covered, is what you're saying.
Yes.
So to me, like the I guess you could say design space of digital assets, like the way we understand them in blockchain, tends to be a little bit more general than the set of financial instruments that we're used to, right? So, like, for example, stocks, bonds, equities, etc., are traditional financial commodities, right? Traditional financial instruments. And then when you go into the digital asset domain, you're kind of more free to create rules that, perhaps didn't exist before, right? So do you see like your platform as covering kind of the gamut of financial instruments in the traditional sense, or do you see it as covering like any kind of digital asset that you can create, and which might even go beyond traditional instruments?
Okay, sir.
So I would, yeah, go ahead, Ash.
Okay. If you consider what a financial instrument is in the most general sense, it is just some identified asset along with some kind of generator, something that it is related to, right? So you have derivatives which are related to some other asset, or you can have stocks which are related to some company, cryptocurrencies which are related to some kind of mining function consensus. So these are just, in a sense, relations between other existing things. So through a smart contracting platform, you can kind of realize this generalization by allowing smart contracts to act as generators or assets themselves for financial instruments.
Mm-hmm.
So in kind of the most general sense, with a strong smart contracting platform, along with the idea that contracts define tokens, you can extend that to more or less any financial instrument somehow.
So a financial instrument, I was just like looking up on Investopedia, right? And it says a very rudimentary definition: a financial instrument are assets that can be traded. They can also be seen as packages of capital that may be traded. To me, right, so, it's sort of like, yeah, go ahead.
No, so I'm saying I guess to answer the way I see it going down is, I feel that, the majority of the use case would, I guess, be, replicating the current financial functionality in the world. But the fact that you don't have to have, a broker or an investment bank approve, this derivative being created or this, cryptocurrency being created, it does allow, people to create these assets that usually would not get created. So you definitely have the value there. The question is, in the long term, is the majority of the volume going to be in these alternative assets, or is the majority of the volume going to be in these conventional assets? I would say that if things go planned correctly and we end up being used as, a replacement for a broker or a bank, then the majority of the assets probably will be conventional. But the fact that you have the option of having those alternative assets will make it useful to allow those to plug in, and then slowly.
Hey, actually, you still there?
Oh, I'm still there. I can't see Adam. I think he's done. I think he's having some kind of technical problem.
Yeah. Oh, there he goes. Hello? Hey, sorry, Adam. We lost you there for about the last 30 seconds or so.
Yeah, I'm sorry. So I was saying that, in my opinion, if things go correctly, the majority of the use initially would be maybe in conventional assets, and then as time goes on and there are more legitimate assets that are being created, I'd say, and people start using them, maybe that long tail takes up a larger market share of the assets being traded.
So do you see the core kind of target user base or customer base of Zen Protocol as what, like financial institutions looking to digitize assets or instruments?
I'd say that financial institutions or high frequency traders, that kind of thing, is probably too big to go after right now. I'd say it's people who currently don't have access. Those people maybe people who have Bitcoin or Ethereum holdings, and they're saying to themselves, you know what, rather than just put my dollars on an exchange and hedge there, why don't I gain access to a portfolio? Why don't I use my capital gains rather than realizing a capital gain? I can just send my Bitcoins, for example, to this platform and take positions in the normal stock market. So I think that's a good market to start with. I think another good market to start with is people who are in countries that basically restrict their freedom. The Chinese, the Russian, North Koreans, whatever it may be. These are people who currently don't have access to the system, but because of our decentralization, we can basically give access to them, where otherwise they wouldn't be able to. Mm-hmm. So those are the initial target markets. Maybe in 5-10 years we become competitive with we become competitive for, let's say, first world citizens, who everything's above board, and they're basically wealthy, and they have a brokerage account. That kind of person, it's hard to see how we're going to be competitive in the short term, but in the long term, we definitely want to get there.
Awesome, guys. So can you talk a little bit about what kind of problems is Zen Protocol solving that let's say Ethereum or let's say Counterparty or some other platform that is also enabled with the ability to create new assets and new financial instruments doesn't have today? Like, what are you guys solving for in creating a completely new protocol?
So I'll just answer about Counterparty, and then I'll let Ash answer about Ethereum. So with regards to Counterparty, if let's say I sell you an option on Counterparty, well, then there's nothing really enforcing that option, right? I mean, okay, I sell you a call option on Apple, and then if I don't pay, there's nothing else I can do about it. Whereas with us, you know, basically, if I, let's say, write you consider that call option to have any validity before you're willing to pay me the premium for that call option, you're going to require that I collateralize that call option. So basically with us, the positions have teeth, right? It's actually meaningful beyond just an empty promise. If I wanted an empty promise, I would go to the current financial system and, you know, use that kind of stuff. The whole nice part here about having a blockchain is that these promises are enforceable, and that's the key thing. With regards to Ethereum, I'm going to let Ash answer more about that.
Okay, so with regards to Ethereum smart contracts, though you can generate smart contracts that do behave like assets, just that you are able to write that is not really satisfactory for something to be useful as an asset. Just because someone hands me something and says this is a call option, that doesn't mean that I trust this. And that means either I'm going to have to read through all of the code in a smart contract defining this call option, or I'm going to have to trust some third party to do it for me. Both of these options are undesirable. It's incredibly difficult to review any kind of code for anyone. It's a major difficulty in software. And centralization for something like smart contracts is limiting, because you're going to get back to the problem of only being able to trade what you are given. It becomes difficult to create new assets because you have to get some third party to attest to their validity. So one of the things we've worked on is being able to verify properties about smart contracts externally to their own code. So you should be able to look at some contract without having to peer into its code at all. You should be able to ask, is this a call option? If this condition holds true, does this pay an asset? Yes. So that's something we've worked on, and something we feel is quite important. Sorry, go on.
No, I'm going to say I think that's very true what Ash is saying. I mean, I 100% agree. If you have anything else to say, no, please go ahead. I didn't mean to interrupt.
Okay. The other thing that's important to us is having smart contracts that not only behave like assets, but behave as assets. So in Ethereum, kind of a technical limitation is their computation model, that they have this pay-as-you-go gas system, which means that a contract can run out of gas through its execution. And that is something that has no parallel in the real world. There's no notion of a real-world call option running out of gas.
Well, my understanding is that that's an intentional feature, right, to prevent things like, for example, a contract that has an infinite loop, right? So you...
Yeah. Well,
right?
There's a reason that technical limitation is... Sorry, there's a reason that is in there. But it is nevertheless a technical limitation. You also have that Ethereum contracts can have these effects. You can have infinite loops that are only caught by the gas system, or you can have contracts that just fail to do anything.
Well, sorry,
you can have bugs in.
I just want to understand. So, like, it's a limitation, like in the sense of that it limit. Like, what do you see that it limits specifically?
It's a limitation in the sense that you cannot write smart contracts on Ethereum that actually behave like their real-world counterparts. There is no notion in the real world of a contract running out of gas or not doing what it's supposed to do because of a bug.
But why do you have to? I mean, you have to simulate the behavior, right, of a financial instrument in the real world.
That's what I'm getting to.
Okay, sorry.
It doesn't necessarily have to be that way. In general, it's impossible to eliminate things like infinite loops in code. However, it is possible to prove that certain pieces of code do not loop infinitely. Mm-hmm. that's relatively common, it's relatively common to see that in programming language theory and like research languages. You have something called a total language, which is one where every statement is terminating. So with Zen, we have something like that, where it's possible to prove that smart contracts are terminating, that they don't have infinite loops. And we're able to prove that smart contracts will execute computational resources. So we don't need to use a gas system to track how much resources something has consumed, because we can know it in advance in the same way that you can know, for example, how much resource a Bitcoin script is going to consume.
So that's really interesting. So can you talk a little bit more about that? Like how can this type of smart contract or program that you're describing, how can it know all of those things in advance, right? Because yeah, go ahead, Adam.
No, I said before, so I think that we should cover how we determine the bounds on computation in 1 second. I'd like to jump in and also give my answer to your question of like why Ethereum, like why do something new rather than Ethereum. So when Ethereum was built, and I don't know exactly what was going through the mind, but I'm friends with the guy who did a Mastercoin, and I am under the belief that basically what happened there is we had a Mastercoin and it had these limited set of functions it could do, and then Vitalik said, this Mastercoin stuff is annoying. Let's have an infinite set of functions, right? Let's have a Turing complete language, and that was the main motivation behind that. And so then basically what they did is they said, okay, we want a Turing complete script language. Let's just take a normal language and try to put that in a blockchain. And then basically they said, oh well, we have this halting problem. And then they just said, well, let's design an EVM with this method that counts every operation. We'll call that gas, and you came up with Ethereum, which is basically a whole different paradigm than any of the other blockchain systems that came before it. And basically, so it was kind of like an experiment of saying, can we build something that can do everything? And then the solution to building something that can do everything was, building a virtual machine with this gas system in it. And I guess what we're saying is, listen, we have a certain opinion on the market. We think that there's a good fit between the use case and the technology, and you want to global consensus is expensive, and you want to get global consensus basically when you're moving around digital property. And basically what that means is, you have these outliers like domain names, etc. But for the most part, it's basically, money and finance, right? And so we come at it from a totally different approach. Instead of saying, let's build something that can do everything, we're saying, let's do one thing that actually answers all the prerequisites you need to do this very single thing very, very well. And going to that, I think, is what Ash was starting to say. Well, in one of the prerequisites that you would need is you'd say, okay, if I want something to be competitive with my current banking system, I would want to know not only that, okay, the counterparty risk of the guy defaulting on his debts is lower in blockchain, but I also want to know that, there's not going to be any bugs in the code, that the contract is going to execute correctly when I run it, that I'm not going to be exposed to some native asset. If Apple goes up, I actually make money. I don't want to be in a position where Apple went up, but then, because the price of Bitcoin, Ethereum, Zen went down, that I lose money on my position. So you basically want to have a situation where not only is it as good as the current system, yet an order of magnitude better, right? And I think so we came at it from a totally different, the design requirement perspective. So that's just my take on why doing another thing, and back to Ash about how we bound computation.
So in other words, if I can summarize kind of your view, Adam, it's like you can create a completely general system, and then the trade-off will be that it might be expensive and it might be like too dangerous, right? Because it's too general, it's too easy to make a mistake, it's too hard to formally verify a correct program, and then trade that off with a system that kind of attacks those problems of bounding resources, of formal verifiability and correctness of the programs that are executing, but then heading for a smaller market, right? And saying, we're not going to try to cover everything, but we're going to try to cover, the set of digital financial instruments, and we think that our feature set is going to work a lot better in that context than a general and potentially riskier feature set, right? Is that how you're thinking about it?
More or less. I mean, you could probably do things that you can do in Ethereum on us, but yeah, more or less, I'd say that we designed it with the principles of being well suited for this thing, finance.
Nice.
Yeah.
Cool. So how do you guys think about like the consensus layer, right? So I know you're building on top of Bitcoin. Like, how did you arrive, at that conclusion? Is your system actually kind of blockchain agnostic in the sense that Blockstack is, or is it specifically predicated on the Bitcoin network?
So okay, so no, go ahead, Ash.
No, okay, so to say that we're built on top of Bitcoin would be a misnomer. It's probably best to say we're built alongside Bitcoin, or even then that's generous. We prefer to say that our consensus observes the consensus of Bitcoin, or that it's aware of the Bitcoin consensus. The point of this is so that you can write contracts that depend upon events in the Bitcoin network. So I might want to write a smart contract that pays out an asset, for example, if you pay me something over the Bitcoin network.
Right. So in other words, like you can listen to the Bitcoin network. You can say, Jake, pay me a Bitcoin. I will issue you some other, financial instrument on my chain. So in a sense, is this kind of like a side chain of the Bitcoin consensus then, or Bitcoin chain?
So side chains, there's two things that you get out of the observation, right? You get the first thing, which is like Ash kind of said, it's like these cross-chain functions where, you can pay me my premium, or you can, pay me money for this asset to be issued on Bitcoin. Or for example, on the other hand, you could look to collateralize a Bitcoin transaction. For example, I could send money to an exchange and say, if that exchange moves those Bitcoins prior to me giving them permission, then they have to forfeit this value, right? So that's like cross-chain functionality. Then on the other hand, we have this thing that you just mentioned, which is like side chains, which is, okay, let's try to put Bitcoin value, secure Bitcoin value on our platform, right? And there we head into the same limitations that, the current side chains have, where basically, you don't have the SPV pegs yet. And those things are a while away. But what you do get out of this observation is that you get the automation. So rather than have a single federation who controls basically all the flow, you have multiple federations. You can have multiple defense models. You could have a federation. You could have something where basically miners say that, that they'll hold the Bitcoins, and that, by the way, that once you mine a block, that Coinbase reward is like frozen for 100 blocks, right? So miners could say, well, for those 100 blocks, we'll say that we'll forfeit our Coinbase reward in the event that we cheat with these Bitcoins. So you can do these nice kind of functionalities that have additional security features because of that Bitcoin observation that you could not get otherwise. So it makes it a lot easier to build pegs, Bitcoin to Zen pegs on us than you could with another system that it doesn't have that Bitcoin awareness.
Mm-hmm. Gotcha. So does this mean, so when you're saying like your system is observing Bitcoin, does that mean that your kind of protocols nodes also have to keep track of, also have to store locally basically the Bitcoin blockchain, right? You're kind of building on top of a local Bitcoin node?
Yeah, so basically, I mean, we've even seen in Bitcoin, right? Nodes end up doing whatever they want. We see, the pool mining happening today, but yeah, basically, when one of our miners finds a block, in order for that block to be valid, they need to commit to the Bitcoin UTXO set, right? So they're committing basically to the state of Bitcoin, and they're saying this is our opinion of the state of Bitcoin, of what the state of Bitcoin is. And if they don't have if they don't commit to the right thing by the opinion of all the other miners, then their block won't be valid, just like their block won't be valid if they double spend a transaction.
Got it. And so I think the second part of my question was like, how, I guess, how entangled are you with the Bitcoin blockchain specifically? Is it that you can, that you're specifically dependent on this architecture of a blockchain, or is it that, you can conceivably in the future, take the Bitcoin blockchain out and replace it with some other blockchain?
We could replace it with, so the reason we need Bitcoin, or Bitcoin benefits from having SPV, right? So basically, based on a block header, you can prove what transactions are in it. So any kind of UTXO blockchain that has that kind of property is, we could do that for. We could use this mechanism on.
Got it. Okay, cool. So how many people are working on this, did you say?
So yeah, we're 7 now. Yeah, we have basically we got a testnet running privately. We're going to basically show it soon, let people start to play around a bit. Still, you know, an early alpha. Yeah.
How long have you guys been working on the alpha?
We've been working on this for a year, basically. Everything was built from scratch. No code was forked. Yeah, so I mean, some of the stuff we've borrowed, you know, from Microsoft, we borrowed some code, but basically we've written the whole thing ourselves.
And what programming languages are you guys using to build it?
I should answer on that.
Yeah. So well, we have a variety of technologies used in various places. I think most of the client software we've been using .NET technology, so we've been using mostly C# and F#. For the smart contracting language, we have a custom language that we've designed. It's based mostly around F# and F*, or obscure as a language, but it's it's one of Microsoft's dependently typed languages. It's essentially writes proofs. So not only can you write programs, you can write proofs about those programs in the same code.
Mm-hmm. And so can you talk a little bit more about F* and how that works? Is it like a functional programming language? Is it like, how does it facilitate these proofs?
F* is a mixed language. It supports both functional and imperative styles.
Mm-hmm.
Theorem proving in programming languages is fairly well understood. It happens through a type system. So many people will be familiar with type systems like Java's type system, perhaps. Or if they're familiar with functional programming languages, it's very likely they've encountered ML type theory. So what F* uses is a dependent type theory, which means it can have types that depend upon other things in a program. And just by having that, by being able to have types that depend on other things, or types even that depend on themselves. So a type that depends on itself, for example, might be integers greater than 5.
Mm.
Just by having these types, you're able to express proofs. That's more or less all you need. It gets a bit more complicated.
So just to like dive into that real quick, but not too deep. So you can have a primitive type, which is an integer, right? And then you can say, well, I want to know about the like non-negative integer, so I can define a type called non-negative integer.
Integers are not necessarily primitive. You can actually derive integers, but you probably want to use a machine extraction of integers. You don't like. I can define an integer by saying an integer is either 1 or 0, or the successor or the predecessor of some other integer.
I think Jake is trying to simplify it for his viewers. So okay, yeah. I think yeah.
Sorry, I'm going on.
So at a higher level, I'm just trying to understand, like, you know, I'm not necessarily trying to simplify it. I just in general terms, it's like, what makes an F* approach, right, kind of safer and maybe even more interesting than, you know, a Solidity approach, which looks like JavaScript and is procedural. And kind of what I'm hearing is that, you know, it's a functional programming language. Like, I personally don't know F* that almost at all. I've seen some examples of code in F*, but my impression is that it's a functional programming language, and like you're able to use sort of its structure to do theorem proving a little bit more effectively, right? And kind of the mechanism that you're alluding to is that you're kind of free to define types based on, let's simplify it and say, their particular characteristics. So one example would be, I have integers, but then I can define a type called non-negative integers as a matter of doing it inside of the program and for the purpose.
Yeah, in fact, that's exactly how it works. FSTAR does have a type of non-negative integers, the natural numbers, and they're defined exactly that way, as integers that are greater than or equal to 0.
Mm-hmm.
So,
here's what I was hoping maybe you guys could help me with, because formal verification and verification of correctness in the context of smart contracts, that sounds great, and we know, like technical people know or might understand, like, the lower levels of that and how important it is. But can we try to sort of describe at a higher level, like what does that enable? Like so let's take like the failure case of something like the DAO, right? So I went and I created a really complicated smart contract. This contract had a vulnerability. It was a recursive vulnerability. It means that, like unwittingly, I allowed certain transactions to go and call an outside piece of code, and if that piece of code was, let's say, malicious, then I happened to be able to implement like this infinite loop that happened to siphon all this money out of the contract. So like in the context of a formally verified system, or something written in FSTAR, if you will, right? How does that system help you to avoid that situation?
Well, okay, so we don't contracts directly in FSTAR. We have our own language based upon it, but they're very similar. But the idea is that you would give your contract a type that expresses its behavior, right? So in its type, you might want to express that it would only pay out to certain addresses. So I could state in its type, for example, that it will pay to this address or this address, and that would be sufficient.
Okay. So, that seems like. Go ahead.
So if you try and give it a type, for example, that is not necessarily true, it will fail to compile. So written with such a guarantee just won't work if these guarantees aren't true. So
okay. Yeah.
So yeah, if I were to say that a contract can only pay out to certain addresses, if that's not true and it can somehow pay out to another address, it won't work at all.
Okay. So then the question kind of becomes like, well, what is the criteria for being an address, right? So in the context of the DAO, you would probably think about it in the following way. You'd say the addresses that are allowed to receive these payouts are the addresses that are DAO token holders, and then the amount of the payout that they're allowed to receive has to be proportional to their like holding of tokens, right? And so what you're describing is that you could potentially use a mathematical, like a theorem proving mechanism to say, like, I can show you that this contract will never pay out to an address that falls outside of that description, right? Is that sort of
yes,
right?
That's correct. That is correct.
And you can do that prior to executing the contract, right?
Yeah, all of this is done at the stage where you put a contract onto the blockchain. All of these properties are then verified. The contract doesn't need to be verified again after that. So once it's been accepted, or everything in it has been proven, then it can just be run as regular code.
Mm-hmm. Sweet.
So I think it's beyond though just the fact that it's not like a formally verified re-implementation of Ethereum, right? I think that with the DAO, it's like part of the thing is there wasn't really definition for, what these DAO tokens are. Like what's a token? Well, it's an ERC20, right? And ERC20 isn't like a very good definition of what a token is. So, and furthermore, like the contract, like what exactly that DAO contract isn't really well defined. It's like these contracts call into other contracts. It's just like a threaded computation. So it's just it's a whole paradigm that we're operating on, where basically you think of Bitcoin, right? And then take a pay-to-script hash and say, well, we can expand that pay-to-script hash model to be basically any computation. And the way you can get any computation without an infinite loop like attack is because of this formally verified, bounded computation model. Then everything starts to be a lot simpler when you put it in your mental model, right? And so I think that's the main thing. Like, obviously types are interesting. The fact that you have types, it allows you to do very cool things. You could, for example, say, listen, I'm a call option that will only accept collateral of type, money that exists, right, to issue another token. So that stuff is really cool, but it's really the whole paradigm. If you think of it like again, Ethereum has to have an interpreted language, a language which is interpreted on the fly that calculates the operations as it goes in order to allow this gas thing to work, and they need the gas thing to work in order to avoid the DDoS. By getting rid of that, we can just basically have the contracts be pre-compiled, load them to the system, and basically work with like a pay-to-contract hash model in Bitcoin.
Mm-hmm. Cool. Awesome. Thank you for that description. I love kind of thinking about this problem from different ways. So let's talk, Adam, a little bit about kind of you guys as a company and as a project in the context of blockchain, in the context of the token sale phenomenon that's been going on. Sort of like, what is your end goal? How are you thinking about fundraising and funding this project? And how do you see the, I guess, like, what's the business model, right, for you guys within the context of a decentralized protocol that you're creating?
Sure. So the business model is, since it is open and decentralized, it's obvious that you have mining, you have tokens. We would basically sell some tokens, keep some tokens for ourselves, and allow the miners to take the majority of the tokens. I mean later, right? Not in like the genesis, whatever. As time goes on, right, more tokens are created, and that would be basically the model. So we're incentivized to make this thing work because we make money basically if the project succeeds, right? With regards to how the company is structured and everything, we have a development company in Israel. We have our headquarters in Hong Kong. Both are just normal companies. We have that's basically with regards to my thoughts of this whole ICO space. I think it's a bit scary what's happening. I think that you have a lot of things going on right now, and I don't know. I never thought it would get this crazy, right? And it is, and it's just ridiculous. So I mean, at some point, so I mean, I think that people have to be cautious, and people should be rational, and I hope that people, that's I guess basically my input.
When you say crazy, I'm assuming you're referring to a number of companies raising maybe over $100 million, right? Or even $50 million, whatever it is, in a token sale against kind of products which maybe don't have market fit today, or maybe are not even like fully implemented today. That's what you're referring to? Do you guys see yourselves as holding a sale that will finance development, or do you see this purely as like, we're going to mine, we're going to get our currency listed on exchanges potentially, or some third party will list them, and then we'll be able to sort of generate revenue or generate runway by selling the currency that we mine, which is kind of the Steam It model, right?
I think, I'm not sure what Steam It is doing, or I think that having a sale is important because the result is, look at Zcash, right? With Zcash, why was Z Classic, I'd say, the most successful fork, was because basically, since the only people who got a piece of it were basically Zuku and his crew and a few strategical investors. What happened is is that the incentives were structured such that it made sense for the community to create a fork and say, you know what, fuck these guys, let's do our own thing, right? Whereas when you have a sale where there's wide participation, then what happens is their incentives are basically to protect the developers also, because their chain and the developer's chain goes hand in hand, right? If that makes any sense. So I think it's important to have a sale. I mean, it's not important to have a sale. It's important to get incentives aligned correctly, right? That's the important thing. How do you go about that while still being able to maintain something for yourself? Is this is the way the simplest and most efficient way I've seen to do it. Yeah. And I also think that by having a sale and having some cash in our pockets, the result of that is that our incentive, we don't have a short time horizon, right? We don't need to basically basically grab a share of the coin really quick and make sure it pumps up in value really quick, even if it's not providing real value to the real world yet, only in order to be able to continually fund development, right? We can basically make sure that the project and the growth is really organic or well justified or well sustained, rather than just having to run and publish articles and try to pump. So that's my take on it.
So you're saying you think you will, at least consider having a sale.
Yeah.
What would be the asset? Well, obviously the asset would be well, you tell me. What exactly would be the asset that you would offer at sale?
So actually, at first we considered, because we didn't want to do an ICO, we considered doing difficulty discounts, right? So basically, people get a difficulty discount, but again, looking at Zcash, that people really didn't like it. So our thing would be like a transferable voucher, whatever. That was the idea. And then you would say, instead of mining, instead of need to find, I don't know, 10 zeros, that you only need to find 7 or something like that. But at the end of the day, we said we're just going to do a normal token sale. That's a lot easier for everyone to understand. We're going to sell these Zen tokens. What are the Zen tokens used for? Well, with us, basically every contract, it has a certain amount of time it's active in what we call the active contract set. So if you think about it like this, think of it, you have contracts that are sitting in the miner's RAM, right, in their memory. And these contracts are contracts that miners basically have to keep in memory in order to be able to validate transactions that come out of them, right? Mm-hmm. And for every block that the contract wants to sit in RAM, it has to pay a fee per block. Why do you need Zen to do this? Well, it's simple. If I'm, let's say, a user and you're a miner, well, it's perfectly fine for me to pay you in whatever token I want, right? But the thing is, let's say Ash is the miner who mines the block after you, right? He still has to bear that externality of holding that contract, even though he didn't get paid at all, right? That's a lot of the reason why we had this block size debate in Bitcoin, because they say, well, growing the block size is an externality to the small miners, right? So basically what we're saying is, listen, since Ash is not a party to the mining fee I paid you, right? We're gonna ensure that I can't DDoS him, because if, let's say, me and you were the same person and we wanted to DDoS all the other miners, I could just pay myself in tokens which are worthless. By having Zen be the token in which the active contract set fees are paid, or what we call the contract sacrifice is paid, we can ensure that there's actually some store of value which people have to give up in order to create these externalities on the miners, right? So that's what the Zen tokens are used for. It's basically for contracts to be alive, if you want to look at it that way.
Interesting. And are Zen tokens implemented on the Zen platform?
Yeah. Yes.
Okay. Very interesting. And what are sort of the supply characteristics of Zen tokens? Is it something that is a fixed supply? Is it issued over time?
Yeah, fixed total supply, issued over time, as in, a normal halvening, normal like Bitcoin style halvening.
Got it. So these tokens are just like, assets of the network that are mined in a very similar manner to Bitcoin, but then can also have, utility within the system, to basically promote in-memory residency, right? For the reasons that you outlined.
Yeah.
And, very cool. And so do you guys then plan on doing what? You are going to be the early miners. You're going to generate a number of these Zen tokens and then offer them at a sale, or
no,
how is that going to work?
So what we would do is we would have a sale, right? We would basically we have to whatever, we take basically we receive cash, and then we would issue a Genesis block, right? And in that Genesis block, basically whoever paid us the Bitcoins,
Got it.
they would have a UTXO in that Genesis block saying, okay, once we activate the network, this is the Genesis block, here's your UTXO.
Got it. So it's just the traditional sort of Genesis block pre-mine kind of model.
Yeah.
Okay. Understood. And how are you guys funded today?
I've basically put down the initial money to do this.
Mm-hmm. Very good. And how much do you think you would want to raise, like within your sale, for the company?
Right. So we're looking. You need to factor in that there's some that have been given for cheaper for whatever the reasons were. Right. I mean, we all know why. So total nominal cap of 10K BTC. The real cap is going to be lower.
Mm-hmm.
Effectively, what this is going to do, it's going to basically provide us a growth for breathing room for like 5 years. Because personally, what I think is going to happen is at some point this ICO thing is going to pop, and there may be a lot of pain after that coming down the road, and it's probably smart to make sure that people are capitalized at this point.
Mm-hmm. Cool. And so I guess my last question to both of you guys, more generally looking at the space, what do you think are the major trends in blockchain protocol design and smart contracts these days? Where do you think this is all heading?
I think I think something blockchain is very much moving towards is being able to do secure distributed computation. You have things hinting at it, like Ethereum. You can do distributed computation, which is somewhat secure. It's not very efficient. What I think is a common goal that people are looking for, not necessarily with cryptocurrency, but with blockchain technologies, is being able to use shared computational resource, being able to have large networks computing things. I think that's an area that blockchains in general will go towards. With cryptocurrencies, I think they're definitely headed towards behaving more like financial assets and emulating existing financial assets, but also being able to create financial assets that don't necessarily exist now. And that's what we're working towards.
Do you guys think, in terms of the implementation of this, right? Do you think we're heading for a world where there is going to be one really, really good blockchain that will handle computation and smart contracts and formal verifiability and will be super scalable and super fast and will win the universe? Or do you think we're heading for a world of segmentation where everyone takes 1,000 different approaches and it'll take a long time to sort that out and figure out who won?
Well, I don't think something can be everything. You're never going to have something that's the most fast, the most secure, the easiest to write in. You can't have everything. There have to be compromises in anything. But I think, as with any other technological product, there's going to be big players and there's going to be small alternatives. And it's necessary to have all of them. It's necessary to have the small systems so you can see maybe things that are very useful kind of bubble up to the big players. But it's also necessary to have large and notable players in any space for their visibility and for the large efforts needed to maintain complex products. So I think there's always going to be big chains, and there's also always going to be small chains.
What do you think, Adam?
I think it depends what we're doing. I think that, to me, I'll tell you my view, and my view on it is that, like, if you look at the market cap of blockchains in general, I think the lion's share should go to money, right? And I think that just being the money, money, could justify like a $10 trillion market cap, right? So I think that being money is probably going to end up being, one thing, maybe one or two, but just like we sell gold. It's like gold, kind of gold and silver, but it's mainly gold, right? And I think that's what's going to happen. And then for the utility use of blockchain, for those use cases, you know, let's say they take the bottom, let's say 10, 15, 20%. And those things, I think, you know, yeah, you're going to have okay, so what is the most useful stuff in there? I think you're going to have a large player dominating each section. So maybe you have, you know, Golem dominating computation. You have, I don't know which other ones I can think of now right off the top of my head, but you have each, for example, maybe Zen dominates finance, right? Whatever it is, you have each of these things doing their section that let's say, you know, I don't know what, finance is 5% of that 20, right? Or 25, whatever. And so then let's say, you know, and then you have, yeah, so it's distributed, you know, like 4 go to one project, and then 1 is dispersed amongst a bunch of others. But the majority of that section probably goes to market leader. That's how I think it, just because, you know, things are more useful. Just like, you know, you have Facebook and you have WhatsApp and whatever, you have network effects. So I think the same thing's going to be here.
Awesome. All right, well, guys, thank you so much for coming on and chatting here and getting into the details.
Thank you for having us.
Yeah, you know, please come back and you know, after you guys are out, and we can take a look more deeply at some of the financial instruments that your platform has produced.
Excellent. Yeah, and if anyone wants to read more about it, you can go to zenprotocol.com. You can reach me at adam@zenprotocol.com or ash@zenprotocol.com. Yeah, that's
all right. Fantastic. Check out the project, guys. All right. Thank you so much, and we'll talk soon.
Thanks, man.
All right. Thank you very much.
Bye-bye.
Take care. Bye-bye.